Hi everyone, Apple and Facebook beat Amazon, and the latest Reddit favorite Microvision are due to announce earnings today. Here are some hot topics for the day ahead. Apple gave investors that kind of positive surprise, the super beat that they were actually looking for. The overall revenue beat Wall Street estimates by a good 16%. So even the positive consensus on the actual consensus was largely beaten. Its subscription services revenues, which have a bigger margin and brighter future potential, came in 27% better than expected. And wait, it only gets better. The first quarter profit was 40% higher than analyst expectations. See Microsoft, this is the kind of beat that investors are talking about. So what a quarter for Apple. Moreover, Apple announced to boost its existing buyback program by some 90 billion US dollars and raise its dividend. So it's like its investors just went to sleep and woke up in heaven. So remember a couple of months earlier we were talking about it, and I was saying be careful, Warren Buffett is not selling his Apple holdings, his Apple shares, because he doesn't like Apple anymore. It's mostly because he is just diversifying his portfolio and still has a good deal of Apple shares in his portfolio. So don't necessarily follow him on that move. Well, I confirm what I said. I confirm that statement. Apple shares were toppish near the $135 level before the results, but the post earnings jump in the after hours trading cleared that resistance, and the price of a share of Apple is now ready to return to where it fell off the rally. So $145, $150 zone won't be a monster to target in the foreseeable future, especially if you think that some of Apple's tech peers renewed record over the past days and Apple just didn't. So Apple has some upside potential left at the current levels, and it could catch up with its peers. Now, other earnings updates, Facebook did a great job in the first quarter, as well as its monthly active users jumped 10%. Its results was a sweet mix of bottom and top line beats, so Facebook shares climbed as well. The chip maker Qualcomm gains were limited, however, due to the chip shortage, but the revenue forecast was of course bullish. There's no surprise there. If you still don't have a chip portfolio for the chip shortage theme play, now other names that you should also consider including in a portfolio are Nvidia, Broadcom, TSM, Samsung, and Texas Instruments. Not only that, our rapid shift towards technology boosts demand in chips, especially with the rising demand for the 5G handsets apparently, but the cryptocurrency mining is also adding a good deal of demand for these chips and for these chip companies. But those who needs actually chips are not always in a good position right now. Ford, for example, wasn't as lucky as Tesla. It slashed its full year forecast and said to expect a $2.5 billion US dollar hit to its earnings. All of a sudden, your Tesla's unchanged 50% annual growth target looks quite sweet, doesn't it? Now, today it's Amazon's turn to amaze its investors. Amazon has near 2 million sellers on its platform who sell some 4,000 products per minute and generates up to $280,000 US dollars each minute and an average of $17 million every hour for the company. So Amazon accounts for almost half of the US e-commerce business, with a very good deal of users beyond the US borders as well. And the stats also show that a quarter of online shoppers were going on Amazon to find ideas back in 2019. With the shops closed, that stat probably exploded, but unfortunately I couldn't find an updated number for that. Anyway, online shoppers are not rare nowadays, we know that, and that's a great power of habit for Amazon in the future. Now, of course, there is some dark clouds over the company. It is that Amazon profited very well from the pandemic lockdown. As you know, the shops were closed, so people rushed even more on Amazon, but that the business could be hit by normalization, as shoppers who missed hitting the streets could desert Amazon's platform at least for some time. So even though the expectation for Amazon is a very strong quarter, strong beat for the first quarter, we may still not see an Apple-like moment in Amazon shares. Amazon lagged behind the Nasdaq since the beginning of the year, and the idea of reflation trade, reflation theme could actually limit the investor appetite, knowing that investors are now concentrated on other areas like cyclical stocks, which should normally see a boost with the end of the pandemic. Now, what does Jerome Powell think about all this? Well, yesterday's Fed meeting resulted in better economic projections that was expected, combined to the continuation of the ultra-supportive monetary policy from the Fed. And that taper talk just didn't happen, as I doubted. So it was too early anyway, and Biden's plans to double the capital gains tax should at least be digested by investors to bring that subtle taper talk on the table. So nothing to worry about on the Fed front for now. You can just sleep on your both ears for the moment with your long positions in hand. Now, today's US GDP data should confirm a robust growth in the US in the first quarter. So strong growth, great earnings combined to a dovish Fed policy is good for stocks overall, for all stocks, even though the valuations are obviously off the ground and we naturally hear bubble warnings here and there because prices are just too high. Now, bubble or not bubble, another stock that comes out of the crowd these days is Microvision. You probably heard about it. It's the hottest trade on Wall Street bets right now. Well, this is clearly a Reddit bubble, and we have seen that it didn't last long for now, because I'm here to give you my opinion on investment that I believe have value underneath. I would say that you should just stay away from the short squeeze frenzies like GameStop or like Microvision. I'm not saying the company is not worth it. We will still look into that shortly, but the trading setup is dangerous at the moment. Now, generally, Microvision is an American company that develops laser scanning technology for projection, for 3D sensing and image capture. So yes, it's a forward-looking product, but if people are rushing to the Microvision stock nowadays, it's not necessarily because it's a promising company. It's because they want to go against Wall Street's short bets yet again. And there is some 20% short, open short interest on this stock, and Reddit traders obviously love attacking this type of stocks. Now, the thing is, Microvision is around for about 28 years and has never seen a profitable year. So this time around, it looks like short sellers don't want to leave the boat so fast. Short bets in the stock have even ballooned despite the Reddit frenzy. So 2 days ago on Tuesday, traders sold some 47.5 million shares short in a single day. So the fight continues on that front. Now, the earnings of Microvision are due today, and we will see what's really up in that store. So I want to collect some information on the company, and here is what I came up with. Now, the Zacks consensus estimate for revenues points at a 49% decline in revenues from the year ago quarter's reported figure. So keep in mind, this is not a new company, this is not a startup, so 49% decline is too much. The first quarter loss is expected steady at 2 cents in the past 30 days. The company reported a loss of 4 cents in the year ago quarter, so the pandemic may have impacted the first quarter earnings negatively. Well, that's pretty much okay, but there is no prediction of EPS beat whatsoever, but there could still be some positive news, such as the company may have benefited from an 2017 agreement to transfer responsibility for component production and to sell production assets without selling any intellectual property. But there is nothing that would justify rushing into the stock so far. And a Yahoo Finance article actually enumerates a long list of what could still go wrong with Microvision's business, which is already not so much brilliant. They cite the risk that the company may not succeed in finding licensing or other strategic solutions. They say it's they point at its ability to operate with limited cash and to raise additional capital when needed. They talk about the fact that the market acceptance may not be there for its technologies and its ability to enforce its intellectual property rights and protect its proprietary technologies, and many more red flags like this one. So in all cases, you should remember that there is a very high volatility in the stock right now, good or bad. So fundamentals are not necessarily brilliant, and going to adventure in such an agitated market always carries the risk of getting burned. So maybe keep an eye on the earnings, but stay away. This is all for today. I'm İpek Özkardeşkaya, and thank you for joining me. I hope this episode of Market Talk has been helpful and insightful to you. Please do not hesitate to follow us on Twitter and on LinkedIn for regular market updates, and subscribe to our YouTube channel for daily market comments. I meet you again tomorrow, and until then, good day trading.